Hello and welcome to this very special interview on Facebook. Joining me today is Manik Nangia, who's the Marketing Director and Chief Digital Officer at Max Life Insurance. As part of Nivesh Befikar, a customer education initiative that the Money Mile and Policy Bazaar have put together to explain every aspect of insurance to you. This is a special interview that we are doing with Manik. Thanks very much, Manik, for coming by here on the Money Mile and talking to our viewers. You've got your phones in your hand. Please start shooting your questions. Insurance is a subject that is of great interest. It's very important. We keep saying that again and again. There are several aspects to insurance that you need to look out for. So if you have any question, please feel free. We are here for the next 15 to 20 minutes to answer all those questions of yours. Here's another question coming from Russell Pillay, another interesting one. He says, I'm 24 years old and I've just had a child. I want to invest for her, wherein the payouts come at different milestones in her life. How would you suggest I do this? Again, one of the popular or, sought after reasons why people bought insurance plans was because of their children. They wanted to buy, child-centric products. Which would not only take care of a situation if the parent were not to, be alive anymore. What are the innovations that have happened on that front, and how do those products work today?
The fact that we're a child-centric society in Asia, the fact that in India our lives revolve around our children, makes it so much more pertinent as a savings goal for most young families today. And that is a great example of where a ULIP fits in. There's a goal. When your child is young, less than 5 years old, for all Indian families, there is this desire to save up for their education, to save up for settling them down. And that horizon is usually 10 to 15 years ahead. Makes for a classic case for a good goal and an early start. What should you watch out for from here? The first thing, the goal is so important to you, you must get there no matter what. Which basically means you must have an element of protection built in along with your savings. Because while you're there, you will, in a disciplined manner, save and put money together to reach your goal. But what if you're not? And that what if you're not question is answered only with ULIPs. There's a sum assured there. Your family will get a sum assured. Or let's take my example. My family would get a sum assured if I were to die in the 5th year. But then, there are 10 more years to go for my child to complete school, for instance. Who pays the school fees till then? Because I'm looking at the college fund. But to reach the college fund, somebody's got to take him through school. New age children's education plans provide a family income benefit rider. One more element of protection that will help my wife pay the school fees for the next 8 or 10 years that my child is doing. Third, in the event of a critical illness, I may lose my ability to earn and thus contribute to the college fund. There is an additional protection built in there that replaces income and ensures that I don't lapse this dream that I set out for my child. And the last, somebody's got to take the goal or take the effort from the 5th year to the 15th. So somebody's got to pay money in that college fund as well, right? That's the funding of premium kind of protection. And so, not only does my family get sum assured in the 5th year if I were to pop it, they would also get the school fee benefit. They would also get the funding of premium for the next 10 years so that the college fund continues to grow. And I would also be entitled to a critical illness benefit should that be the reason why I lose my income.
And these are all built into the product?
These are all built-in options. Some of them are built in, some of them need to be chosen. But the fact is that regardless of where you buy it from, the Max Life plan has all of them. But regardless of where you buy it from, these are the things you should look at to make sure that you have a well-rounded children's plan.
And this step-up milestone payout, how does that work? So, for example, you said that one part of that corpus is for the education, one part is for, say, higher education, one could be for marriage. So is there, the product says that when your child turns 18, you get X, turns 21, you get Y, turns 25, you get Z?
doesn't say that on ULIPs. See, ULIPs have a fund, and after the 5th year, you could do a partial withdrawal depending on what your goal is, depending on what your need is. Some traditional plans in the participating side are actually built like that. They're built like that they give out one chunk of money when the child turns 15, one chunk of money when the child turns 18, and so on and so forth. But those are more traditional constructs, like the participating constructs or the guaranteed income constructs where all this is pre-decided. In that sense, ULIP is more for an active and an aware customer. So the idea is
so
that
17 could become 18 years,
yeah,
or 19 years.
And you have
it's
the
your
flexibility.
choice. You withdraw when you want to.
You dip into your fund and you take as much as you need, so long as you're keeping true to your promise that it's for your child.
It's been wonderful chatting with you, Manik. Thank you very much for coming by, and hope
Thank
to
you very
have you
much.
more often and
Thank you
take
very
lots
much.
more questions. And if you have any question that you haven't yet written in, please write it right away. We will continue to come up with several experts like Manik, and I'm sure he'll come again as well to answer all those questions of yours. Keep investing. It's very important to start early. It's very important to have a long-term goal and continue to invest and not keep withdrawing your money or stopping your investments. That's really the key. Thank you very much for watching this special.